What's up, everybody? So, no, I didn't sleep in with the time change, but I did get wrecked. I didn't realize it was like 5 in the morning, and then I went to bed. Anyway, good morning. How's everyone doing? I think the intro just hypnotized me. Now you're gonna buy all my covered calls. Wahahaha. How destroyed do you feel with DST? With what? I don't know what you're talking about, Cool Daddy. Thanks, Capote. So I told you it was late at 1 a.m. You were up another 4 more hours. Yes. Well, depending on what time zone you're in. Uh, sorry, Snake Whips. I feel like you're in an aquarium. I am. Thanks, Baron Peg. I put it out last night. Oh, daylight savings time. You have to remember when you use acronyms, I'm just going to assume that you're referring to stocks. It doesn't really make me feel destroyed. I usually don't notice the time change. But today it did mean that I got one less of my 3 hours of sleep, so it's working out. Talk about margin calls. What do you want me to say about them? It's a possibility we've seen one. No, I don't do naps. Naps are for children. Sometimes I'll fall asleep while I'm doing other tasks, but that doesn't count. Yeah, it is. Uh, Jimmy not moving? Is it halted? Yeah. Market wide halt until tomorrow. Well, later tonight. Can you talk about the failed margin calls on LME? Um, yeah, I mean, what do you guys want to know about it? It's a commodity, first of all, right? So it doesn't really operate under the same rules as an equity would. There is a limited supply. I think as soon as the contagion began to reach the nickel suppliers, they shut it down. Um, to be expected. Like the ladies at the beginning. The game Gone with the Wind that nap in the afternoon between social engagements. How are the futures markets looking going into this week? I can take a look. Shitty. Well, not super shitty. Tech's down. Small caps down. But I don't think they're open yet. They'll open later. So we'll see. They can recover really quick. Orange Milo, thank you so much for becoming a Dillionaire, dude. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream today.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no cold.
Making a slow cooker chili right now. Any recommended special ingredients? I've got the basics plus cocoa powder and lime juice. Roasted jalapeno. Just a bit. You gotta just like, if you don't have a grill or access to a grill, just jab it with a fork and hold it over your burner until it's black on the outside, and then just scoop out the inside and chop it up and chuck it in. It's phenomenal. It adds like this like slow burn heat, but the flavor's sublime. I heard they unwound or something 24 hours of trade. How the fuck does that work? People bought shit that didn't exist. So with commodities, supply is limited, right? It's not like an equity where infinite shares can be made. It's really not applicable to a short squeeze in an equity. It's a bit different. But you can look up previous squeezes in commodities and stuff like this has happened before. But because of the deliverable nature of a commodity, the physical product has to be available for delivery. There's no synthetics, right? Okay, that shouldn't be what happens potentially with GME. No, but they can shut GME down for a whole bunch of different reasons. I know that's like a big fear for everyone. Like, oh, can they shut down a short squeeze? Abso-fucking-lutely. That's it. Will they? They're really not motivated to. There's no reason for them to, unless it starts to pose systemic risk, and then you can expect them to do something about it. They don't really care if people get angry, as you can see with the nickel squeeze. It's part of their job is to protect the integrity and structure of the market. I would argue that it already doesn't have very much integrity to protect, but the structure is important. Thoughts on Occidental Petroleum? Had big insider buying Friday. I mean, Buffett just bought in. Icahn just sold out. It's just a big playground for billionaires. It's a long-term buy and hold. If it's something you're interested in, it'll probably continue to rise as long as oil prices continue to stay high. And that'll also be true for most other oil plays. I'm not sure Occidental Petroleum's still the best place to be. And remember, those guys are buying massive positions, and when they do sell, the rug pull will be intense. So chasing after them might not be the best idea. Could you go over all the settlement periods for MMs and APs? I'd like to check it against my cheat sheet I'm making. So MMs have T+2. APs have T+3 and then T+2, known as T+5, which in practice is actually T+6 because of the final settlement day. So this is AP, this is MM. And then any trade marked long before the end of the trade date gets 35 additional calendar days. Then, lastly, ETF agents acting, or APs, whoever's cash settling an FTD and an ETF, can have an additional T plus or minus 2 or 3. It's really 35C plus T plus 2 plus or minus 1. And this is for the ACH settlement. So until that cash is settled, they have that time to transact the trade. And so that's why we see T plus 9 plus 35 occur, because this is actually T plus 5 plus T plus 3 plus 35 days. Man, if only GameStop was a commodity. I mean, there are forward contracts on GameStop that require delivery, but because of the theoretically infinite nature of equity liquidity, there will always be shares to deliver. FINRA, US government, the SEC can freeze the stock for 30 days, I believe. The clearinghouses can shut down trading on it, as can NYSE. FINRA, no. DTCC, yes, they can halt. I don't think the DTCC can halt for as long, nor can NYSE halt for as long as the SEC can. It's just they really don't care about shutting it down until it gets very out of control, right? Like it would have to present catastrophic risk across the whole market. They wouldn't really have an excuse to shut it down before that point. They might halt trading for like a day or two, but I mean, it's a $9 billion company. It's really just like 7 right now. It's just not that expensive. How do you feel about June 150C for GME? I have some. Very few. They're kind of at the top range of my June options. My June options right now, as of Friday at close, extend from $95 to $140 primarily, and I do have a few at 150. I have some March 25s at like 200 and 220 still, that I just fucking didn't remember to roll over, and they're worthless now, so I'm just holding them. What's up, Dominic? Thanks, man. Can trading be shut down on lit exchanges while be remaining open in ATS exchanges? No, if there's a freeze, the stock isn't traded anywhere. Not in dark pools, not on the lit exchange. There can be institutional transactions with the DTCC, possibly, but those will still get printed to the lit market as soon as it's unhalted. Pickle Morty, Dillionaire, I appreciate it, man. Gurk Hot Tub, same like J Roland DD, probably. Would halting create new problems? At some point, it all needs to be unwound. That depends on how they package it up. I would say that if there was a path to them trying to halt it and get rid of obligations, then it would be a delisting of the stock in order to allow obligations to be cleared in the OTC market. Which is really, really unlikely and would I mean, I don't even know if they have precedent for that. What about OCC halts without a market halt? Is that a thing? No, you would just have a market halt. What's up, Girk? What's up, Glider? Why is OI for 190C so high? Probably bull credit spreads. I think we're seeing a lot of puts sold, like low puts, like 80, 85, 90, 95s all last week. They're probably using the credit from these like low value puts to buy further dated out of the money calls. Like a bull credit spread. Hypothetically, if I were flagged as PDT, can I open up an account or another brokerage or just switch to a cash account? If you sold options, you could try calling your brokerage and saying that you were trying to exercise them and they may forgive you. Usually if you call your brokerage on your first like PDT violation and kind of just explain the situation to them or tell them you made a mistake, they'll ease up on you a bit. Would halting create new problems? To that. Hypothetically, hey Greg, any opinion on what happened with silver this past week? Thanks. Silver. No. Oh, these are CFDs. Sorry. Spot silver. Here, let's look at that. Peaking on March 8th and it came down. I mean, wasn't all precious metal just running at the beginning of this week? Yeah. It's the same across the board. It's just, you know, a little bit of panic after the market opened on Monday or into market open on Monday with the war and the economy. As things kind of settled down throughout the week, we saw prices decline. But that's going to be across all of the precious metals market. Are aliens real? I mean, probably. That's a potential price action for this week. That's a good question. It depends on how they try to like let the strategy play out. We've bottomed out again. And you know, we actually aren't in a bad position for a bounce. If we look at the horizontal resistance here on GameStop, down here at this low end, hold on, just that. So we're not in a bad price range to bounce. We might trade a little more volume down to like 94, but if you look, we haven't really traded much volume below 94. So even though our closing price was kind of low, there's really not a lot of volume backing it. And that's right at that 92, like 87 resistance that we saw kind of get tapped on January 21st and again on January 27th. So I would say that our time here will most likely be short-lived. So if we are to bounce from this point, we may see a small climb into earnings with anticipation. And then depending on what happens at earnings and on futures expiration, remember that most of the price action from those events, like options expiration, the CME futures expiration, XRT, the S&P rebalancing, most of that will be seen in the next T+2 or 3 days. So really, I would expect most price action to occur the week of March 21st. So the 21st through the 25th. We may see something from earnings, but that's super unpredictable, right? If the reasons you gave for what happened with Opex, which one do you lean towards? I really don't think that they covered it. I know that the price increase is theoretically sufficient, but the volume traded during this period was actually very low. If you look down here, and constantly declining, the vast majority of that volume occurring on Feb 8th, where we already had a very large number of ETF FTDs due. Feb 8th was like our largest ETF FTD date, remember, from all the can kicking. So if you take that out, then the volume moving forward over the next few days really wasn't sufficient to match Opex. Also, the other thing about Opex is that it's specifically to do with options expiration. And so you can't truly cover it all in advance, right? Like you can hedge, you can appropriately hedge, and then, you know, at gamma neutral, you have less to cover. But the problem with that is it's exposure from across all the ETFs as well as exposure on GameStop, right? And so the ETFs, you know, options are exercised all over the place there, especially those in the money puts that were closed on Feb 18th, and that requires buying of the underlying stocks. And it just didn't happen. XRT is also not removed from threshold, which if the obligations owed to it were cleared, it would be. XRT would no longer be on threshold. I think one of the ETFs they thresholded was liquidated. And then the other like 3 are still, like, they're small, but they're still on there, right? Which is significant. Some of those ETFs don't really allow for them to abuse creation to the same level. And so they've used creation in those other ETFs to the max. They just haven't abused it, right? Like the Vanguard funds and the BlackRock funds, like IJR and IJH, IWM, or like Vanguard Total Market, which is actually the only ETF that contains every single meme stock. It contains everything else too, but it contains those. And it has very, very high numbers of FTDs, hundreds of billions in FTDs. So I think 2 is pretty likely, or 3. I would say that the share creation that we saw through the Opex period, like the ETF flow, and then the subsequent puts that were sold, could be sufficient evidence that they marked forward Opex with ETFs, or a margin call. And the last minute rules change and the money being pulled back from Melvin really do push me into thinking that it's a margin call. Don't forget, didn't Lauer like tweet about a margin call on Melvin like a month ago or something? Or that Melvin was going under? Thoughts on potential price action for this week? Oh, okay, so whatever that. Sophist, thank you so much for becoming a Dillionaire, man. I appreciate it. Hit me up on the Discord. I'll get you added to the Dillionaires Country Club after the stream, man.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gert get the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510
So
while I'm selling CCs. like another fucking moon wind. Praise be to RC and the VWAP, please, cause I need G and me to move soon, man. Got the man GG on the CNBC saying that he ain't seeing no collusion.
Feed me some copium. Will my May 100 C's print? It's pretty unlikely that they would, right?
Yo, but we ain't no cult.
What do you see happening for earnings? I mean, I don't know. If I could predict companies' earnings, I would be far too rich to bother with any of this. Paris, honestly, like you never know what's going to come from earnings. I'd like to see guidance. I don't think we'll get it, but maybe there's an announcement, and so I'm bullish on that. I think earnings will be better than Q3, so that's good. So I would say I'm not overly bullish for earnings, but it's the opportunity for them to announce something with everything else that's coming up, like that window could really lead to something if they do. So hopeful. You said RC was going after someone. Do you think any of the usual suspects short BBBY and GME? I was trying to think about that too last night. I wonder. I kind of want to do some digging into Chewy and what happened with Chewy's buyout. And also some digging into his dad. And see what information I can find, because it feels like some of the moves he's making, like, sure, yeah, BBY is undervalued. It's not a bad buy, but why there? There's lots of undervalued companies, ones that are easier to take over. You know, ones who they also have, you know, shit profit to earnings ratios, and, you know, aren't fairly valued, especially right now with the market down. So why there? Why the stock so highly correlated with GameStop? Why the stock short from the same shorts? Why the stock, you know, that has been struggling to push off the shorts for the last year? I mean, shorted in the exact same way at the exact same times that GameStop was pre-January 2021. It's a weird choice, right? Like, I think he could go after better companies, bigger companies. I see the advantage with BBBY from a business perspective, but it still feels personal. So yeah, I kind of want to dig into some of that and see what's going on there, because there's something more to it. His buying on like all the biggest FTD dates of the cycle, his largest buy occurring on the literally on the futures T+2+35 day. We bought 1 million shares, and the amount of FTDs that can be generated from that is significant. You said the vulnerable time for an entropy swap is when the user fades the top. Can you explain what to look for when this is occurring? What is the upper limit of the GME entropy swap? There is no upper limit. It's just simply gamma sensitive. So as long as the price is going up, the value of the entropy swap will go up as well. The risk when they fade the top, when their obligations are closed, is that they push down very, very hard. And to look for that peak on an intraday or like slightly longer time frame, you would be looking for stagnating price while volume is increasing, right? Implying that they are selling into the peak, right? So volume is spiking very, very hard, because obviously buy and sell are both volume. And so yeah, you'll see the price stagnate and then volume ramp up. And then as volume starts to drop off, the price will come down, and it'll come down quick. We're divesting the baby unit. Well, divesting the baby unit's great for shareholders, right? Because they cut off that profitable arm, right? And then everyone gets, all the shareholders will get shares of it. And, you just got you got ownership into like a free multi-billion-dollar revenue flow, right? So, and as would Ryan Cohen, and then it streamlines the primary business, which can then grow faster with less distractions. So I think, and as far as the proxy war goes, it's pretty obvious what he's doing. It's a very standard tactic. And for those of you guys that don't know, proxy war, proxy battle is when shareholders band together and kind of push back against executive management in the direction they want to see the company go. Down to 104, then up to 125. You sure Opex was not covered? I mean, we were down to 87 and up to 132. So no, I think it's possible it was. But like I said before, with XRT still on the threshold list, I don't see the clearing of sufficient volume to say that they may have hedged some in advance. But if they'd covered and closed out their obligations for the quarter on XRT, the not only would the price of XRT have gone up, but the XRT would no longer be on the threshold list. And so that's the big reason one of the biggest reasons I don't think they've covered Opex. Sorry, I lost my place. I know I'm behind, but I'll catch up. Is it likely that scenario 2 and 3 are happening at the same time? I Opex margin call and also used ETFs to kick the can another T plus 9 plus 35 days. I mean, if there's a margin call, they don't really need to kick the can. But they could have, yeah. Especially if that would cancel out the call, right? It's worth it. The issue with kicking the cans through the ETFs another T plus 9 plus 35 days is a lot of these ETFs are being rebalanced this coming Friday. And they will, be rebalancing their asset pool and closing out obligations in addition to their dividends coming up the following week. So it's a tricky situation to carry ETF obligations through. And in the past, we've seen them cover because of this. We saw them cover March last year for this exact reason. 20 something million shares sold short on XRT right now reported, probably much more through derivatives, right? And so all of that needs to be cleared out. Or they're going to be, paying the dividend on it. And then if the price of XRT runs into the dividend could be astronomical. There was also the Melvin transfer of $4 billion to the Caymans. That was odd. They also opened a long fund. So Melvin's, ready to jump ship to his new fund as soon as this all finishes playing out, right? Remember, LLC is not personally liable. Angel Fire, thank you so much, dude. Still Still here, still holding. I appreciate it, man. Me too. Anything important from the first 25 minutes of the stream? Sure. So if margin call, in what time frame would Melvin say be required to cover their short positions immediately? No, if there's a margin call, they have like 14 days up to 4 times. And for margin deposits, they have 15 days up to 4 times. So and this is the SEA 15C3 dash 3. So quite some time. The first date with no extensions for that covering would be the 17th. But it could go far longer if extensions are granted. So that's something people should be prepared for. So if we're looking at a margin call, all that pulled in cash will allow them to pass the call. That would be a result in clearing of the Opex obligations. No, but if we're looking at a call, they could have, if they got called, say on Opex, and then they used ETFs to hide that position, right? And kick it forward, like Stefan was talking about through ETF creation. That could still put them back on the hook for a margin call in T+9 plus 35 days. So as soon as those FTDs come due in 6 days, they could get margin called again. And I don't even know if they'd be able to mark long at that point. It's possible. So if they mark long, then another 35 days would pass and they would get margin called again, right? So it's as soon as those obligations are coming due each time, unless they can get the capital together, and with people pulling capital back from them, it's unlikely. If Melvin is the culprit in this instance. Would an entropy hedge be sufficient if a margin call occurred, or what's your opinion on that? An entropy hedge is simply to protect short volatility players from spikes in volatility and price. So it is hedging their short volatility position. Like I've said before a bunch, I don't think Citadel is long short GameStop, but I do think they are short volatility on GameStop. I also think they're responsible for a great deal of the creation that goes on and the sale of those synthetic shares into GameStop in order to continue to reduce volatility. Something they've been fairly unsuccessful at since November. They used to be able to drive our IV down into like the 70s and 80s before the next run up, and we've been over 100 at like IV 30 for months now. You think we're currently in a downward gamma squeeze from all the bullish calls and puts by retail and all the subsequent delta hedging needed to be done? No, that goes the other way. Positive delta is hedged with buying on a naked call. Yeah, Lauer's tweet said rumor was Melvin was down 25% on 124. You discuss your RC tweet theory? There's no tweet theory. If GameStop did a Q&A and you had the ability to ask a question, what would you ask? I would ask how much computer share costs per month in maintenance fees. Historically, GME also always announced holiday earnings in January. This year, if they don't, This year they didn't. Yeah, well, it's a different board now, right? So like I never expected them to announce holiday earnings this year, which I told everyone, back in December and January. It's not the same board. It was unlikely that they were going to continue the same traditions. Yeah, I mean they are saving it for earnings, right? Because that's when it's supposed to be announced. You're saying his father was possibly a casualty of 2008 or another market collapse. It's possible. I don't really know that much about his dad. A lot of earnings estimates are very positive, 0.25 through 1.25. I think these are being artificially inflated, so anything looks like failure and we crash. But do you feel like this is a fair guess? It seems a bit high. I would expect us to have. It would be odd if we had positive EPS. I think GameStop did well in quarter four. So their earnings estimates may be in line with expectations. Especially with so many other earnings in the sector already reported. But you're right, it does reduce the potential for FOMO. I heard you say a mantra that's been thrown around for a long time. They're running out of ammo. Besides using, sorry, one second. If RC BBY buy-in same like GME buy-in, then we might see serious BBY action in 2 or 3 months, or is this timeline not quite that defined? No, if it's same like GME buy-in, we would see price action far sooner. Like early April. Sorry, Protege on. I just wanted to catch that before it disappeared. Heard you say, so running out of ammo. Besides using the ETFs for creation, what else are they losing grip on to continue the charade? I mean, it's mostly the ETFs. It's the compounding of their negative position in the ETFs that has continued far longer than it normally does, and is now at like a far larger position of obligations in ETFs than we've ever previously seen. So they're really using those ETFs as much as they feasibly can. We saw that with the reg show of XRT. The last time they pushed that hard was last February, right? When XRT got thresholded on the way down from the January run. It's not that they're out of ammo because the creation in a ETF is unlimited. It's that the obligations have become so vast, and with ETFs, when they rebalance, those come due, right? So there is a built-in time limit on them, if that makes sense. Also, GME share utilization on the shares visible is already maxed out, and we see that spike immediately as soon as XRT goes onto the threshold list. And so there's really probably not. I know everyone thinks there's a ton of shares to borrow over there, but I think even that's limited. We're seeing them recycling shares from one lender to another. So like all of this last week, we're seeing like 60,000 shares get removed from like IBKR and then immediately pop up in Fidelity. Like within 15 minutes, right? And this isn't a coincidence, right? They're looping them to avoid raising the overnight borrow rate. And this one's easy to understand, right? This is literally using one credit card to pay off the other, right? So it shows their moves are desperate. It's basic price action like BBY, like GME Jan 2021, or they learn how to avoid a similar outcome. I mean, with the rules changes to variance swaps, it's harder for a Vana squeeze to occur, but I think we could still see a lot of the same price action. Like a massive buy-in like that in the middle of an FTD cycle is going to create waves of failures. And those failures are going to lead to price improvement. Also, the timing of his buy-in and the timing of the close of his buy-in is directly in line with the timing of the close of his buy-in on GameStop in 2021 when he finally announced his last buy-in. It was right before the December's futures expiration. T+2 from that expiration date. GameStop was added to the reg show threshold list. 13 days later was the beginning of the January run on the 13th. If I wrote a book on this whole thing, how would I do it without becoming a James Rowland or whatever his name was and plagiarizing the community's DD contributions? I don't know. Don't reference their DD or cut them in on the royalties. Ted Cohen had some kind of glass importing business. Maybe his company got targeted. Maybe. Hold on, I lost my spot. Last week I asked about VIX info. I read their white paper and want to make my own calculator, but for individual stocks, not the SPX 100. Does something like this already exist? Yeah, you can just look up volatility calculator or use Black-Scholes. Cutting off the baby arm sounds like a very hostile takeover. Potential contagion throughout the theorized short basket comments. I don't remember your previous question, LC. Can you just rephrase the second half so I know what you're talking about? If Cohen is actively targeting the shorts with his role at GameStop, is there an angle they could go after him with insider trading based on the knowledge of their positions? No. Knowledge of someone else's position is not insider trading. Insider trading is when you have knowledge of your own position where you are an insider and then you trade on that information. Insider trading is pretty hard to pull off without being an insider. If the entropy hedge is successful with the short hedge funds, what happens after? New cycles, new floor? Yeah. No, it doesn't get them out of their short position. It simply protects them from the upside in volatility and price. JP Morgan gave a loan for the margin call and nickel, so they're preventing these calls. Yeah, that happens. With Jimmy trading in the 90s, if we see them slam the price post earnings, we don't have much support below. Could a drop right back to the 40s be a strong possibility? That's our next low resistance. Yeah, so if we slip down through 87, we don't have any historical resistance between there and 40. That doesn't mean new resistances won't form. It just means that historically, that's our next level. XRT dividend was estimated by Market Chameleon to be 93 cents. So about $1. Yeah. It can change based on what happens during the rebalance. After RC's letter, I think there is a 0 chance of guidance during earnings call. I do think that direct registration will be announced as well, over 10%, even though it's not having an effect. Yeah, I think a range between well, I don't want to use percentages, but I would say between 8 to 12 million shares registered. 10% would only be a 2% increase from October, which I doubt. Thoughts on BBY getting reg showed? I read the DD, but I still think you're holding something back from us on your real thoughts. We like the tinfoil. I think it's possible, but we have to wait. We'll have to wait until after futures expiration to see if it happens. DK, dude, thank you so much for becoming a Dillionaire. I appreciate it, man. And the rest of you guys also.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance.
Yeah, Subway Cup. It's literally in the Discord, man. And I posted it on my Twitter also. And it's like the top post on the subreddit. Another fucking moon man. Praise be to RC and the VWAP, please, cause I need G and me to move soon, man. Got the man GG on the CNBC saying that he ain't seeing no collusion. And we might be apes, but we ain't that joke. Motherfucker, trades, this is popcorn code. When the Citadel fails, I'ma buy my own boat. Sail the Elliott waves like a Kramer on coke. Yo, but we ain't no cult. Should I hypothetically roll? Should I hypothetically roll 5x April 165s to leaps, or is there still hope for 200 plus days in April? I mean, I've already rolled all of my Aprils out to June because the timeline on this stuff could be pretty long and I don't want to lose any theta value anymore. So I rolled out to June for price action between March 21st through 25th. If I don't see anything there, then I'm going directly into leaps. We know they don't have infinite cash, but they'll keep playing this out long term, or they will let one of the players fall. No one cares if Melvin or Citadel is around, right? Even if they lose some money. I would say Citadel would be far more protected than Melvin would be. Oh, I don't know, Chakuseki. I'm sure they'll be super stoked about it either way. What do you think about theorizing that the illiquidity is actually what is drawing us down? Given that the retail lacks the capital to sufficiently buy up GME without leverage, which is not happening. I mean, the lower the price gets, the more retail can buy. So there's another side to that coin. Also, the more institutional interest there is in the stock. If GameStop was trading below $80, you would see institutions buying in. Bigger ones and in large quantities. Do you believe Citadel and P72 could have help the swaps for Melvin? When Melvin had to publicly disseminate their positions, Citadel and P72 wanted out. Maybe, but I don't think the short reporting thing has happened yet, right? That's possible. Depending on its effect, is that where you were looking to make gains via calls or with long positions? Yeah. If there's a margin call, absolutely. What's up, Chicken Tender Daddy? How likely is it that estimated positive EPS for GME is just another FUD tactic if GME comes up short? I mean, just use the net because not all of them are going to be complicit. Thoughts on cat seemed not sure if it's chasing to get calls at 210 going forward given the market. I think cat still looks solid. MACD's still wildly diverged. It doesn't look like it's coming down. If anything this week we may see cat begin testing that upper boundary. And if that breaks through, you know, the next price targets are much higher. They're at like 235 and possibly and it should already be above this 245. So it gets really interesting if we break out of this descending channel, which we've mostly broken out of. There's some room for some consolidation over the next few days. As you know, it could even maybe dip back to the 200 range before pushing up further. This is one of the reasons I said having a lot of time on cat is very beneficial, because when this breakout happens, and it will at some point, I mean, you're talking about almost a $60. Like if it tests 245 again from its low at the beginning of or at the end of February, beginning of March, you know, the low down here at what was it? I think it hit 179. So you're looking at the potential for a price improvement of, you know, $65 or 36.29%, which is huge, right? So if you have far dated calls out here in June or July, you have plenty of time to realize the rest of this price action. If you're playing shit on a shorter term, it's dangerous. If cat gets rejected here, it can take like a week for it to fall back down to 200. And then, you know, it can chop at 200 for a little bit of time before coming back up. So yeah, I mean, we're at a resistance. We'll see if it breaks out. If it continues to push up into this test, this would be my like next target for an exit. If it breaks through there, it's very likely that it's going to test the higher end of this. So yeah, Stefan, the EPS stuff could be fun, but you can just take the average and, you know, you can make your own estimate. Estimates, much like earnings, are bullshit though. So I used to work at BBY in college in the early 2000s. It wasn't a scrappy company. It was management heavy and asinine, low tech even then. I wonder if it's changed. They've been moving more and more into digital sales over the last year or so, but probably not much. They're definitely stagnating. I have a theory that short GME position manager tanked the price in part to bounce GME back to R2K for liquidity churn. That's possible. Market cap cutoff last time was 7.3. GME's down to 7. Yeah, I don't disagree with you. But they'd really have to suppress the price for a very long time. And then also the buy-ins from ETFs, if GME was suddenly the heaviest weighted stock in the Russell 2000 again, the buy-ins from like Vanguard and BlackRock and State Street would be insane. So if we move back to the R2K, you know, we're looking at those 8 million shares at least being bought back that we lost in June. Resistance at 69. Yeah, there probably is. Any reason you didn't link the Dillionaire stream and announcements today? Shit, I forgot. Whoops. It's also public, so it just annoy. It announces to everyone, but I'll post it. What is the cat upper boundary price? It depends on when we hit, but between like 226 and 224. I don't know how much effect SLD is going to have on cat. It has a bigger effect on tech stocks. I posted an article saying that 0.72 redeemed 750 from Melvin. It seems like they're blowing up Melvin and letting Plotkin go to his new fund. Probably. I'll be using June calls and leaps to capture any more value if certain events happen. But at what point are you looking at your shares to sell? I have no reason to sell my shares ever. Right? Snake whips. I can just sell covered calls. So I have no intention of selling my shares. Definitely not. I would definitely never sell them below like 300. So above 300 it gets a little no, I'd probably still just sell covered calls before I sold my shares. I'm in a position where I can hold GameStop for 10 fucking years, right? I can wait until it's valued the way companies like Chipotle or AutoZone are. I can wait till it's an $1,800 a share stock, and I can just sell covered calls on these runs and profit that way. So I'm not really concerned with ever selling my shares. If there is a short squeeze, a definitive short squeeze, and GameStop runs into the 5 or 8 or 1,000 or above, then I will consider selling parts of my position. But without a short squeeze, I have no intention of selling ever. At least not in the next 3 to 5 year window. Well, 2 to 4 now. Started requiring public dissemination of swaps on 2/18/22, and a week later, Citadel wanted their $2 billion back. Yep. Also, a week later, they changed the requirements for the pricing of margin on variant swap positions. Are you diamond handing all your assigned shares from Friday? Yeah, why not? I mean, they're cheap, right? So I had sold 10 95 puts and 50 90 puts. And so I got about 13,000 credit for these. And then, I paid out 95,000 here. And so, but the cost basis isn't terrible. It's below my current cost basis on GameStop, which is like 86.74. So it lowered my cost basis marginal, like fractionally. I think I went down to 86.72, something like that. Because I had some losses on options also, but yeah, I don't mind keeping shares I bought below my cost basis, so it worked out. If they were above my cost basis sufficiently, I'd probably just sell very, very close to the money covered calls and not really care about assignment. And I would do that until I reduced the cost below my cost basis. And then if the cost had become reduced below my cost basis, they go into the I'm diamond handing them forever pool. Why would RC buy calls at 60 and 80 though? We could have, so A, they're cheap, and B, he's using them to represent ownership. But C, BBBY has a pretty fat chunk of yearly revenue, in addition to having like 7.9 billion in assets. And this is maybe the thing I didn't mention in my DDs. Which I guess I kind of wanted to, but it was hard to explain on paper. Well, no, I didn't want to talk about it yet because it's super speculative. But there is a possibility that he's buying into these undervalued, debt-riddled companies that have good positive cash flow and solid assets, because his buy-in is triggering squeezes, right? And the release of shares during those squeezes allows the companies to clear out the debt. But the fact that he doesn't have ownership in BBBY makes me think that this isn't the case. So basically, you buy into a company, it's super low, the price spikes, you release shares at the peak. This gives you a ton of free capital. You pay off all the debt. And then, you know, when the price settles, it starts to come back up. There's a strategy in that. I don't know if that's what he's doing, but he could. Yeah, I think Jamie Ivy is going to stay pretty high for a long time. It's still very volatile. I mean, somebody was adding up based on that like old computer share document that we found. Somebody was adding up, like just doing some napkin math, and came out to like 14 cents per share in fees. Negative 14 cents per share in fees. Your money on CCs is dope. I'm just curious when you start thinking twice on selling shares off in the future. I still really do believe in GameStop's like turnaround. And I can use CSPs to acquire more and more and more if that takes a long time, right? And offset the cost of those. I mean, there's plenty of opportunities in a company that you believe in, right? Assuming Melvin is being scapegoated, how does this change anything with regards to closing out shorts? I.e., Jamie's short squeeze equals liability ladder that expends far beyond Melvin's assets. Does it? I mean, what do you mean? Like the shorts that Melvin created are far in excess of what Melvin had. Melvin's part of the DTCC and the NSCC. I mean, they're insured against failure by their counterparties. So the obligations would simply fall to whoever is carrying the counterparty risk for Melvin. Not sure if it's a good thing for the company. Did Susquehanna pull their money back? Not yet, huh? Not sure if it's a good thing for the company, but one thing I've liked about BBY was a return policy. They'll literally let you return anything for any reason at any time with receipts. That's cool. Costco's got a long way on that too. Can we stop saying disseminate? It's demasculating, Ken. Can you elaborate on those new margin requirements? They changed the pricing and risk model for variance swap positions, requiring less margin during periods of high volatility on a variance swap. So essentially reducing the likelihood of a honest squeeze. But don't get me wrong, that's a beneficial thing for them to do, like outside of GameStop. If you look at the big picture, with the market coming down and volatility in the market rising, and the amount of volatility sold short across the market, it is beneficial to the market as a whole for them to change that risk model. So there is a case for it being not just directly related to GameStop, although the timing of it, I would say, is indicative. Someone was saying in Discord, if you sell CCs for less than 30 days out, it resets your long-term investment status on your shares. No, only if you get assigned and then buy back. I'm pretty sure that's complete bullshit. Although different countries might have different rules, but no, your shares are your shares. You're selling a contract backed by those shares, but that doesn't take those shares out from under your control. They're still your shares. Do exercise calls help out with CNS churn? No. If anything, they hurt it. They hurt the ability for CNS to find real shares, or CNS to find marked long settlement. How do you contain your excitement for the upcoming next few weeks? I don't know. Ha, I fucking knew it. Thanks for finally answering. Wait, what? Does anyone know if BBY has any shares earmarked for future sale? I looked back through the last few earnings reports and I didn't see any share offering agreements. They are in the middle of a 3-year share buyback for a total of $1 billion worth of shares, which at their current price is a lot. Talk about the effort to bankrupt GME through the FUD pushing DRS. That's tricky. There's not, first of all, we don't have CS and GME's direct schedule for fees. We have fee schedules from CS for other assets, and we have their fee schedule, I believe, from last year. It does indicate that it is extremely expensive for GameStop to maintain this number of registered share accounts. Very, very expensive. But sometimes in excess of the stock contained within the account. But without more evidence, it's hard to figure out exactly how much. But yeah, I don't think that maintaining thousands of DRS accounts is good for GME's bottom line. And you have people, registering one account with one share, and GameStop's paying for the maintenance of that account. And while it may not be significant over time, it could be quite a lot. If it's $1 million or $2 million a month over, 12 months, that's $24 million a year. And then, the compounding losses from that could be quite high. And I do wonder. I don't know. I don't know if that really causes any damage. It's a lot of money, but relatively, maybe not. I believe the board will negotiate a new price with CS because the company will not accept this pricing system. I mean, that's their pricing on a much smaller, the pricing, the the one that I posted, that pricing is on a much smaller company. But yeah, I mean, they could try to renegotiate, but then what are they going to do? There's not really all that many other transfer agents are going to charge just as much. That's just the cost of utilizing a transfer agent. Normally they're only really used for employee benefits and like employee stock plans, and so the cost is, you know, something they have to manage, but it's generally not very excessive. But when you have your entire shareholder pool, you know, using hundreds of thousands of accounts, it becomes very, very expensive very, very quickly. Is there a resource, preferably a free website that tracks companies doing share buybacks? Not that I'm aware of. Like specifically that tracks that. Do you think this may be it, and that the shorts are really concerned with everything we are seeing? Opex failure, BBY buy, XRT threshold, GME utilization, possibly. Although GME is not 100% utilized. It's just fucking Ortex that reports 100% utilization. There is a lot of utilization. It is not at 100%. Ortex just takes public information and repackages it. So yes, 100% of the shares that we already know about are being used and lent, but there are shares that we do not have visibility over, and we do not know the utilization on those shares. Vanguard and BlackRock shares, for instance, are not reported publicly, but they are part of the SEC lending pool. So it should be noted that you know, utilization is not at 100%. At least if it is, that data is not confirmable. But as for the rest of it, yeah, possibly. I don't know what pros there are to DRS. Nobody's ever shown me one that mattered. Treasuries have started to invert, and end times are upon us. Yeah, it's not good. I think GME will announce anything about its IMX tokens with earnings, or I mean, I think they've already announced everything about IMX that they're going to announce, right? At least for the time being. GME should post how much it costs when they post DRS numbers. Probably. I mean, you can probably contact investor relations and find out their fee schedule. I intend to. Because if you look at like computer share, here, like, and we go back. Here, let me share this. This is what was kind of compelling for me, actually. And I know everyone just thinks like, oh, Gurk hates computer share, it's FUD. But that's not really the case. If we look at computer shares earnings, can I make this big enough for people to see? And we go right here. So in June of 2021, you know, net change in cash was up 359.7%. Operating income was down 13%. And we go to September, and operating income is up 20%. Net change in cash is up 3,213%. So their cash from accounts went up like Moast, essentially, between June and September of 2021, and it's continuing to climb. I mean, it's going to stagnate because there's only so many shareholders that are registering, but they're making a obscene amount of fucking money off of this. You know, you're talking 112 million. Oh, that's the net change. Where's the cash? Hold on. Yeah. So it's a lot of money. So there's a motive there. Take a moment to say thanks for what you do. So glad the weekly stream has come back to pre-perm levels. Even if BlackRock has to lay you off, Riku. Thanks, Batbones. Think about puts on stocks trending with IWM. Could you look at wing potential downside? Sure. What is this? Wingstop? I mean, they have shitty food, so I don't hate the short here. There's not a lot of room for downside though. It's trading at 123 now. I mean, maybe 118 or 112. I don't know. This is, I mean, you're just chasing down, right? This would be the same as like buying, like if the stock was running, would you buy it at this point? Like if this was just straight up? No. Yeah, it seems like a big chase. I think this could probably bounce. I mean, don't get me wrong, like a market crash could lead to lower prices, but that's a big fucking gap down you're aiming for. I mean, you're basically banking on the market crashing again. Because right now it's like almost at resistance. I watched all of Laguna Beach. Interesting. It's a 3-year buyback. They accelerated it, but it's broken up over 3 years. Have some nuts. Yeah, so I don't love the wing play, D Swimo. I mean, I'm not saying that you're wrong. I mean, if it crashes, but if the market crashes, everything's gonna fucking tank. Should you ban daylight savings time? At least I wouldn't be so tired. Seek a Star. Pickles picks of this week? Yeah, I'll get them posted up later. I have a few. The high and low IV range since the sneeze? After June, when it peaked at like 200%, we've been between 80 and 140 basically ever since. Yeah, I'll update Cat and Pickles picks. Spy's actually starting to consolidate. And this breakout's going to be fairly important, or breakdown. So this is 2020 November. I don't And so for this to stay a steep correction, we'd want to see a turnaround soon. And a breakout of this lower trend. If this continues to fail, which is becoming more and more likely, I think a fall down to like 337 is possible. I think if it falls through the floor of this, we're going to drop pretty hard. Is Sen still a play? I think so, but a long one. I do not like these. I mean, right now we're trading at the same price we were trading at back in April of last year. Lifelay, thank you, dude, so much for becoming a Dillionaire, man. I appreciate it. Or continue 2 months. Congrats. Thoughts on AMD consolidating at above 100? Could we see a breakdown below? Yeah, absolutely. If the market comes down. Any news on a live data aggregator? I've reached out to a few that'll allow me to like share data, like paid data on stream. I've only heard back from a couple, but one of the ones that I really liked kind of fell through, and because they don't want their data published anywhere. So like, oh, you can talk about it, but you can't show the data on the stream, and that wasn't really acceptable for me. Because I know a lot of people can't afford to pay like $1,200 a year for market data. Do you call or put heavy on long-term SPY plays? I'm pretty put heavy. A drop to 337 would most likely cause a market crash. I've been trying to learn how to draw supply and demand zones on the SPY. Any tips or pitfalls to watch or avoid? I would say always back check your support and resistances with previous historic trends. Like, don't just rely on a short-term support or resistance to support your position. I would say that's probably the biggest one that people mess up a lot. Commodities will probably do well. The reason I went ahead and bought a new espresso machine was actually because with prices running up on steel and stuff, they're gonna just go through the roof. And with inflation, going out to get coffee is gonna be way more expensive. So it's actually cheaper for me to drop, you know, $1,600 to like $2,300 on an espresso machine that'll last me 10 years right now than it is to wait, and also cheaper than it is to like, I'm not going to stop drinking coffee because the economy is shit, right? So I think of it as an investment. And then, you know, if I lose everything and I'm broke, I'll at least be able to sell it. Yeah, it's already live for everyone. Protege. I opened the stream up to everybody because it is an important week with earnings coming up. Have you ever thought about the fact that there's a possibility that short hedge funds are watching your stream? Sure. You check TA on MAXR. Looks good. Mm. It's already breaking out though and meeting some resistance here. I would say I think a move up is possible. My target would be like 40 to 50 in that range. The consolidation looks good though. It's bullish. Volume's not really getting killed off. I think it's going to keep moving up. This isn't even a bad play. Nice pick. It's probably in their interest to not raise rates too much, Dominic. You got it, baboons. Yeah, I'm more of the, well, I'm an active investor, right? Glider. So I would much rather play the downside and then use that capital at the bottom than pull all my money out and wait for things to go down before buying in. Mm-hmm. TWAC deposit withdrawal at custodian overview. Interesting. Hmm. So the BBBY calls ranging up to $80 aren't necessarily showing he expects the price to run to $80. I kind of think they actually do. I think if BBBY can eliminate debt in the next like 2 quarters or some of it, a fair value for the stock would easily be like, oh, and if they eliminate that debt through the sale or breaking off of the baby brand, the Bye Bye Baby brand, with their assets and cash flow, I think they could easily be, a 10 to $14 billion company. So I do think he thinks it's undervalued, and it is. I think at this point, it doesn't matter what the rate hike is. The market's not going to be happy with it. It doesn't do anything to the cost of oil, right? And so, like, raising the rates isn't going to make oil cheaper. And so then if they're just directly addressing inflation, like a higher, there's no positive change they can make. If they don't raise rates, people will be upset because they're letting inflation continue to grow. If they do raise rates in excess, the market's going to be upset because the rates are being raised. How do you think SLD will affect GME this week? It usually doesn't affect it that much. I mean, they might start raising the price on GME as early as Monday. If we're going to see a run into earnings. I know. Yeah, raising the rates doesn't do anything, unfortunately, to address most of the inflation going on right now. But politically, a raise in rates looks good, right? So it's like DRS. It looks really good, but it doesn't do anything. Thoughts on the Amazon 20-to-1 split? I'm already selling CSPs on it. If hopefully I'll be able to pick up enough to buy like 25 shares before the split. I definitely intend to add, those shares to my kind of my like long-term investments that I just sell covered calls on. So there's still Citadel is short volatility, right? So they're selling kind of like insurance to the market. I do think they're largely responsible for these ETF positions that we see on like XRT, IWM, and they use those created shares to stagnate volatility, right? And they use their lack of reporting requirements on those ETF positions to keep those positions very well hidden, right? But they are responsible for a lot of the creation that occurs on GameStop. Melvin's short position was gonna fuck up their whole thing, and that's why they bailed Melvin out. I think Susquehanna is similarly short GameStop, like Melvin. So I think Susquehanna is long short. I think Melvin was long short. I think Sus might be long short the basket. I think Citadel is short volatility. I think what are they called? The other big is it like Dimension or something like that? Is also short volatility. And I think like maybe BlackRock, Vanguard, and State Street are long vol. That makes sense. Direction, whatever the fucking, I can't remember the name of this fund advisors. .72, I don't know. I would say likely also short volatility. But that's tricky. They could be more involved with the ETFs. I don't really know much about him, Hestia Capital. Thoughts on market reaction to the missile attack in Iraq? First time I'm hearing about it. It's not, no, this isn't .72. This is the other big put seller on GameStop. I'll look it up. Hold on, I have it right here. Um, Simplex. That's what it is. Virtu, not a lot of interest in GameStop outside of January of last year. I mean, they jumped in to grab all that sweet arbitrage during the January squeeze or like sneeze, whatever you want to call it. But their involvement with GameStop outside of that minimal. They're also just an NYSE DMM, right? So if GameStop's popping off, they're gonna hop in and collect all that money on arbitrage, right? Was the hold something you consider bullish? Yeah, I think so. I'm still in wheat. I'm in it. I did average my position down. I flipped my $14 calls down to 10. So now my calls are at 10, 11, and 12. I think it's still good for a move. I don't think the situation over there is improving. What's your strategy when selling covered calls? Depends on the stock. I generally, it also depends on if I'm looking to be assigned or I'm not. On most stocks, I just simply sell the call at the price that I would sell the stock at. On GameStop, it's a little different, right? Because I'm doing it at GameStop, Tesla, I'm doing it to generate income, but not sell my underlying shares. And so, yeah, you can use technical analysis and data analysis and determine a price where you are less likely to be assigned or where the risk of rolling is lower, and then you would pick that price. Yeah, Dimension Fund Advisors, that's the other one. So with the buy-in from, but they're not, them and Simplex aren't in every one of the basket stocks, and so I think their positions a little more diffused across, but they do have positions like in GameStop and AMC, things like that. So the buy-in from RC probably triggering a lot of FTDs and BBBY being in a lot of baskets we know about. We're looking at a spicy period in the next few weeks. I hope so, yeah. It should. Here's the thing. I don't know BBBY's FTDs during Cohen's buyback. We don't have that data yet, not until this week. So we'll know a lot more about that this week. If BBBY mirrors GameStop, we'll see it pop up in Reg Show the week of the 21st. How do you find a good scanner? That's tough. Okay, so paid scanners are generally used by a lot of people, which makes them shitty. Building a scanner requires getting an NDA and knowing someone that can build one. And then, paying them and months of tweaking it. For most things, FinViz is sufficient. I don't really think you need to go the other two routes. Like, you can probably use FinViz to find out what you need to find out. But I don't know. I use scanners, but more to just highlight opportunity that I then dig into more. And the things I scan for generally are are pretty basic, like volume, increasing IV, price action. So the things I'm looking for are really special. And then also I feel like people place too much trust in scanners. Like they're nice for identifying opportunities, but I mean if you're active in the market, you're going to find plenty of opportunities. I don't know if RC is going to buy into more basket stocks or not. He might. That's compelling. He could. He could buy a pretty fat chunk of like Express. That'd be very interesting. He could buy. No, I don't think he can afford to buy into Best Buy. That would be another good one. Nordstrom's Macy is too expensive, overvalued. I'd say Express, American Eagle Outfitters might be a good one. Dillard's, I don't think he can buy enough of a stake for it to matter. And management over there is doing a great job. So the activist investor track probably wouldn't benefit him much. Hmm. None of the SPACs would matter because of their offset liquidity. Like they can keep releasing shares. Yeah, I think Express would probably be one of the better targets, or maybe the best target. Yeah, Webull has a scanning tool. Almost all paid market data services will offer some sort of like built-in scanner. Do you buy 100 shares at that strike? Yeah, you can hedge your CC. I've done it. You can also just buy a call, right? So like if I sell, like say I sell a GameStop 120 and we shoot up to 110, right? And it looks like we're just going to take off. I can buy like a 115, right? And then capture that price difference, and then when I sell the 115, I can buy back my 120. So you can hedge them on the fly if you need to. You can also roll them out. So like I could take that 120 and roll it out like 4 weeks to like 160, and then if the price peaks at 180 and comes back down to 150, I'm fine, right? Sometimes, rarely, but sometimes you can roll them profitably. Someone buys into Express next, then maybe 100% sure he's targeting short hedge funds, I assume. Yeah, I mean, I need to look through the rest of the basket because there's a few other things I'm looking for now, but right now I think Express is one of the better targets just because of its extremely cheap price, moderately low float. So we're gonna be pleasantly surprised with VU through the 25th. Let's fucking go. I hope so. I'm really excited. RC buys into Wetzel's Pretzels catalyst all along. I don't know about that. He doesn't seem to be targeting stores that are primarily in like GameStop's in a lot of malls, but it's also in, a lot of, like strip malls. I don't think there's any standalone ones, but BBBY is kind of different on that front, right? Like BBBY really isn't, or like Bed Bath and Beyond isn't in a lot of malls. Most of their locations are standalone. And also, interestingly, they own a lot of them and their warehouses as well. So their distribution network is good. I did think it was interesting that they'd also partnered with DoorDash for short, like 1 day delivery, which is interesting. When buying a call to hedge your CC, would a weekly be best? It's best to buy one that's longer dated than your covered call if you're hedging. So if you're selling a weekly, you like buy like one for the following week to hedge. Because you want the value of that lower call to, well, I mean, I guess it doesn't really matter, but you could do either one. But sort of turning your covered call into like a PMCC would be the idea. If RC buys into a pickle company, who would short pickles? Don't answer that. I already know. Yeah, I agree. There's other elements to his investments besides just the short basket, but the effect on the short basket is very real. And that effect is very good at shaving the debt off of these bloated companies, isn't it? That's kind of what I talked about earlier. You know, if his buy-ins trigger these massive runs because he's buying in on these FTD cycles, then he's essentially uh, creating value in the company as when the price spikes, where they can release shares, and then on the other side of this price spike, you have a debt-free company, which is huge, right? And then your investment can realize value over time. New lease on life, if you will. There's pickle coin already. Yeah, I know. Read an article last night about wheat and how retail is buying in but doesn't know what they are doing and will lose money. My question is, who's short wheat? Some we'll find out. All right, guys. Thanks for tuning in. I will see you bright and early tomorrow morning at 9 a.m. For the pickles picks. I'll try to get those posted into Dillionaires tonight. Most of it's going to be updates on already existing positions, but there's a couple new things that I'm looking at. Anything else? That's probably about it. There's some interesting DAO stocks that I'm be looking at, but besides that, thanks, Harry Balls. Have a good night, everybody. See you tomorrow.